Hey, what's up, friends? Eric Crumbaker coming at you from Real Estate and Shit. I don't know what episode this is, but thanks for tuning in. First and foremost, be sure to subscribe below. Leave some comments, like it. Good, bad, or ugly, I do not care. Just leave some comments. Tell us if we're good or bad, or what you guys think on some of the topics that we are discussing today. Really cool episode today, guys. If you're tuning in, I have a really cool special guest. First time here, long-time friend. I feel like this is a radio show program saying that. But yes, one of my best friends, Robert Mack from Newport Beach, coming from FIV5. Rob, thanks for coming in today. I really appreciate you driving up a little 45 minutes to sit down with us today.
Yeah, I mean, it's my pleasure. I'm super pumped to be here. I can't wait to just rap with you all day.
Yeah, I'm excited.
And then, you guys know our second host. We have Chris Fox, the famous, infamous Chris Fox. How are you today, Chris?
I'm fantastic.
I like your Dare shirt.
Funko.
What is Funko?
They're sand cars.
Ah, of course.
It's the manufacturer of the off-road car that I
should have
have.
known. Are you friends with him?
Yeah.
Things I just should have known. Oh my gosh, I love it. Well, both you guys, thanks for coming in today.
Yeah, thank you.
Got some really cool topics to you guys for today. If you guys are tuning in, you guys know how the show works. We kind of talk about the real estate market or hyper-local market, things that are affecting us. And then also we pull up the hottest real estate headlines and we either debunk them because they're full of shit, or we kind of discuss what topics they're discussing, whether it be rates, the economy, where this market is going. But either way, let's jump right into it. Usually when I get into it, I kind of talk about our current market, but today I have Robert Mack here from Newport Beach, so I'm not going to really dive into our hyper-local market, but I did want to talk to both you guys together now that I have you guys in the same room. Both you guys are very similar in what you guys do. You're both heavily in the market. You work with a lot of clients. You take a lot of listings. So you guys are in the trenches with this new market, and both of you are very successful. So right now, being on the listing side, being in this new market that we are all experiencing, what are your sellers doing right now? Do you have to give them more advice when you're taking these listings? Do you have to give them more risk management? Are you more of their therapist? Like, kind of walk me through how this process is going. Is it harder to get listings? Rob, let's go first with you.
Yeah, so there's a lot of questions in there.
Yeah, it was like 9.
Yeah, there's like 9. Let me see if I can index them. It's definitely harder right now.
Okay.
I think usually when we talk with sellers are very optimistic about their home price, their home value. They always think it's worth more than the average buyer out there. And then the buyers are the exact opposite. In the last couple of years, we've been able to push those boundaries and agree with the sellers in terms of what they wanted because the demand was so high, buyers were willing to pay for it.
Yeah.
Now, though, it's just not like that.
Okay.
Like if you're not motivated to sell and you're not willing to price your home where it should be priced based on the local and micro data, don't waste your time.
Okay.
Buyers are smelling it from a mile away and they're not playing the games.
Okay, so the sellers you are working with right now, are you having to negotiate differently? Are you having to have different types of conversations, risk management conversations? Is the contract life shorter? Are you doing 6-month contracts, year contracts?
Yeah, 6 months are pretty standard for us.
Okay.
I've always been of the mindset of I want to earn my seller's business every single day. So I never really cared about contracts because I knew even if it was a month-long contract, I'd win them over and they would renew.
Okay, I like that.
We push for 6. If somebody wants less, fine.
Okay.
We know we're going to earn their trust and it keeps us accountable. The conversation is just very it's very transparent and you've got to be real with your people. And we're focusing on 3 Ps right now.
Okay.
Home preparation is very important. How a home shows is critical.
It is.
How you price a home is absolutely critical because you need to get on the buyer's radars in a market where a lot of buyers just have assumed it's not a good time to buy. And then P for patience. We are so used to home selling in 7 days, 3 days, 24 hours that if a home doesn't sell in 2 weeks, we literally start losing our minds. And I'm guilty of this. Like I just start panicking. Like, what are we going to do? Should we drop the price? And it's like, hey, we can all just exercise some patience and just know that right now we've got to give buyers opportunities to see properties and maybe come back 2 or 3 times because affordability has gone up significantly.
Yeah.
Right. So if a buyer is willing to buy in this market, they must be really, really motivated. They need to feel like they're buying a compelling product, a product that's worth it. And that takes time now versus just you have 3 hours to make a decision.
Yeah, before I get to Chris and his response, that's why I asked on the contracts, because homes are taking longer to sell. Mm-hmm. And right now in our market, homes are taking 34 days to sell. Not in our brokerage. Just so you guys know, our brokerage is 19 days. So that's 33% faster. I mean, who wouldn't want their home sold 33% faster? Anyways, but our market, it's 31 or 32 days. So when you're having a month contract, you're expired by the time that home sells. So that's why I was asking if there's any change.
No, I mean, we've always pushed for 6 months. That's always kind of been the thing. Okay. If we're doing like ultra luxury, we'll push for a year. But again, if somebody says, hey, I want 2 or 3 months, it's a business decision for us. And sometimes we're willing to be flexible.
Okay.
We always want to create a customized approach with every single client. But yeah, you're absolutely right. I mean, 6 months is probably a reasonable amount of time now. I think the average days on market in Orange County is closer to 70.
See? I mean,
closer to 70, right? Yeah. I mean, look, every price range is different.
Yeah.
Like 4 million plus, you're looking at 300 days on average.
Yeah.
But yeah, I mean, having a little bit more time to market the property and maybe setting up realistic expectations with sellers and saying like, look, the average days on market's 70. We're going to cut that in half, but that means you still have to be patient for 30 to 35 days, which is probably 10 times longer than it was in the last 2 years.
So the conversations have to switch a little bit. You're having these conversations with your sellers, letting them know what to expect. Okay. Chris, talk to me.
Yeah, I mean, as far as contract timeframes, I mean, I don't need the pressure for my sellers. I have already put more pressure on myself than my sellers will ever put on me to perform.
Yeah.
I'm performing for myself, not only them, but, so it's like, and I think in the process of that pressure and performance, I think it's obvious to the sellers that you're the right person. They made the right decision, and they're going to let you do your job however long that takes, because you are the best. I mean,
yeah, I completely agree.
Who's next in line?
Are you having to change your conversation on listing appointments? Or you have to change the dialogue? Do you have to be more of a therapist 3 weeks in? Like, what does this look like?
Yeah, I mean, setting realistic expectations for me, because again, I put so much pressure on myself to alleviate that stress of them questioning where we're at or why we're not having success yet.
Yeah.
It helps me relax and do my job and perform better. But yeah, I mean, and it's more important now for the home to show its best. It's a slippery slope. Before it was a slippery slope, but it just fell into an investor category. But now that investors have slowed down some, you don't have that catch net, I feel like, to still succeed and sell at a lower price. So you need to make that investment. You need to hire somebody that's going to, do whatever it takes to show that house at its best.
I completely agree. It's funny. You said you got to have your mind right. It helps you. And I kind of spoofed a little thought in my head, because we're having to be the therapist. We're having to make sure that our sellers are in the right mindset and they understand the right conditions and that they are on a right trajectory. But if we're not in the right mindset because we think the sky's falling, then how the hell are we supposed to service these buyers at a high level? And I feel like there's a disconnect between agents and clients right now with that aspect, because a lot of people that I know, not people here, but people that I know, are losing it. They think the sky is falling. They think the market is tough. So if you think the market is tough, how are you supposed to talk to your lister, your sellers or buyers for that matter, to give them comfort in this market? Which actually leads me to my next question. Now that we're talking about your sellers, and we didn't really dive into the buyers, but I feel it's kind of the same situation, just flip-flop. Are you guys partaking in this market? Have you guys bought in the last couple months in this market? And are you guys planning to take advantage? And I like to use that terminology because I do feel it's an advantage. You're taking advantage of this next market over the next 3 to 6 months.
Yeah. I just bought a primary residence.
Oh, see,
right?
there you go. This guy's a real estate agent, been in for many years, and he just bought a primary residence, everybody. So take note of this.
Yeah, and I actually, my interest rates were slightly higher than they could have been had I bought 6 to 12 months ago.
Yeah.
But the price I got for the property, the credits I was able to negotiate to buy down my rate, and the creative financing that I found through one of the best lenders in my network created an affordable monthly payment.
And how many buyers were you competing against?
None. I went back and saw the place 3 times. My wife was like, submit the offer. I'm like, no, dude, I'm going to go back and make sure this is the right place. But that's, I have so much empathy for those buyers that were looking when it was like they had to compete against 25 other people and they had 1 hour to submit an offer. Dude, this is a really big decision. You know, this is a decision that's going to affect your life for at least 3 to 10 years, I would say.
Easily.
And so it's like to make a decision that fast and go through it, man, seemed hectic. I'm the kind of person that wants to go see the place. I'm telling you, I went back 3 times and I fell in love with the property, and my motivation to move was so high that the rates didn't matter to me. As long as the monthly payment fit into my box, I'm good, because I'm going to be in this place. I'm going to own this place for 10 years till maybe the rest of my life.
And I think that's a key for buyers right now. You have to fall in love, and it's got to be your home for 10 years, you know?
That's true.
And when you get a hot property, you see them. They come out of the shadows. Like, my phone goes ape shit. Like, I'm like people, buyers, you know, they're in the shadows. They're looking. They're waiting for that special property. So as us as agents, I think it's important for us to transform every property into a special property and give a buyer an opportunity to fall in love with it. Because if they fall in love with it, they still will buy.
I agree.
Yeah.
I agree. So what about you, Chris? Have you purchased in the last couple of months? Are you partaking in this
haven't,
market?
but you know what? I know what I want.
Okay.
And I haven't seen it yet.
But
if
you're
it
waiting.
pops up tomorrow, shit's going to hit the fan. We're going to be moving.
Wow. I love that. I love that motivation.
Yeah.
And
as an investor, I'm definitely, like, think about this for a second, because I was in the market I got my license in 2006.
Okay. Yeah.
And I didn't know anyone in the business. I didn't even know anything about the business. So in 2007, 8, 9, 10, when all these investors were picking up properties at, you know, pennies on the dollar, that held on to them, that crushed it. Like, I didn't have that opportunity because I didn't know what was going on. But now, you know, I have the ability to earn more income and invest in real estate when opportunities pop up. And I have no doubt in the next 2 to 3 years, we're going to see some incredible opportunities pop up to pick up properties for significantly less than what they were selling for 6 to 12 months ago. Yeah. And just sit on them. Because the market's always going to cycle, man. Always. I don't care how bad it goes down. It's always going to come back up and beyond.
Yeah.
And beyond is the
and so long.
the kicker, yeah.
That's the thing, is it's been so easy to make money in real estate short term that people got very comfortable with that they forgot that real estate is actually a long-term investment.
Of course. Well, myself, actually, it's the reason I wanted to ask you those questions, because I'm close escrow next week on our property in the Palisades.
Very cool.
I mean, Chris has been on my podcast. Everyone in this room has heard me spiel about this over the last 6 months. I've been waiting for this opportunity. I've been waiting for this market. I think this has been a great opportunity for people that didn't want to play in the market the last 2 years. And not that I didn't want to play in the market the last 2 years. It's just, it was a crazy market. And now the opportunities, I think, really outweigh any type of negative, even compared to 6 months ago. I think it's hard to go against 20 offers. It's hard to release your contingencies before you even do anything. It's hard to give away your first child, before you even have it. Yeah. Like, these things are, in our reality, we think it's, like we're joking, but we're putting so much risk on the table for ourselves. And it's so funny that Robert said he saw the house 3 times. I swear to God, I've seen this home like at least 6 times. Carrie and I have walked over there. We went to a couple open houses.
Yeah.
While we were at
Totally
escrow, they had open
it.
houses. And guess how many people walked in? Us. There was nobody out there. No one had any interest. This home fell out of escrow twice before we even took it. And I love the fact that there was no one competing. So you feel you're in the driver's seat this time.
Sure.
And you get to ask for the credits, and you get to negotiate the way you want to. And it's almost feeling like you're in a seller's position. You take it, or you can put this home back on the market, and let's see what the next 3 weeks look like, because the last 3 weeks that we just wasted in escrow were not good for you either. So actually, you know what? I'm gonna request something.
We've shifted from make me sell it to make me buy it.
Yeah, when we wrote our offer, this is the truth. We wrote our offer, and we submitted an offer under the ask price, but we asked for a 1% back in for the rate, and they said no, but they reduced their price down to, I think, like 1 for like 15 or something like that, which was still over than what we asked. So we actually responded back in a counter at $1.4 million. And she called us back almost frantically, like 10 minutes later, like, oh my God, guys, no. Like, just so you guys know, you actually wrote under what we were even willing to do. And our response back was,
Exactly.
Yeah, well, that was yesterday. Today's going to be a completely different day. Rates changed over the last 24 hours.
Yeah.
So this is where we're at now. How do you guys want to play? The ball's in your court.
Negotiations are so different when you know you're the only offer on the table.
Not 45 minutes later, they continue the escrow. So, I mean, it's a great opportunity. And that's why, people think I'm crazy, but I'm telling anyone that can purchase a home right now, this is the best opportunity to be doing it.
Well, here's what I'm telling people. And look, we don't know. It's hard to talk in absolutes. Like when somebody's like, it's a great time to buy, I'm like, go away. Because you don't know the situation, right?
True.
It could be a great time to buy. It might be a horrible time to buy. But what bugs me personally is wanting something and not trying to get it. So the buyer that comes to us and says, oh yeah, the rates are at 7.25. It's just not a good time to buy. I'm like, oh, well, okay, I totally get it. Like, what did your lender say? Like, what are your payments at? They're like, no, we haven't even talked to a lender. It's just not a good time to buy. And I'm like,
Get out of here.
how do you know?
Yeah.
How
for
do
sure.
you know it's not a good time to buy if you haven't? Do you know your loan options? Do you know if the seller might give you a credit to buy down the rate? Like you don't know until you try. So my whole mission for my clients and my team and their clients is like, let's explore your options before you just write it off.
Yeah.
And dig into the emotional component. Like time is our most valuable asset. And I don't know how much time I'm willing to give up if I'm, in a condo scenario or don't have the space for my children to play. And it's like, there's something more important than the mathematic equation to the right time to buy. It's about getting settled and having that family and getting situated and creating those memories, So that's what I'm digging into. That's what I want to find out about my clients is like, is it right for you because of your monthly payment or so that you can start life?
No, agreed. It's funny. I'm going back to when Carrie was sitting here a couple weeks ago, and I really believe in what she's saying because I agree with both of you to a certain extent. But I also think that I don't want to work with anyone who hasn't gone to a lender or who's telling me one thing but they haven't gone through the processes, because those are the people in this market that are not going to buy. The people that I want to work with right now are the people that need to buy because there's a high motivation already set in, or they need to sell because they're moving or they're upsizing, whatever it may be. But anyone that's on the fence right now, don't even waste. We're so busy right now. Things are moving so quickly in this market that we don't even have time for those people. Like, you need to figure it out for yourself while you're missing this opportunity, because I can't help you.
Well, I feel like that's the dialogue also amongst a lot of buyers. Like, we're going to wait. We're going to wait for the opportunity, but they don't acknowledge that. I think this is the window of opportunity right now.
Yeah.
Because what do we have ahead of us? A decrease in rate potentially?
And what's going to happen then? Everyone's going to come right back
You've
in.
already missed
multiple
it.
offers.
Like overnight, you've missed it.
Easily. What I don't want to tell you is to write an offer on a property to even have one more offer on that property. It just takes one offer to screw the whole deal up for the one person really wanting that home, because then it's the highest and best. And it's like, oh, you want to cancel? We have them on the back, and like, you better perform, because then they're going to come in and take it away from you. And it's like, you put yourself in a handcuff situation. So yeah, I think you're right. Right now is a great time. We don't see many multiples, and the people who are already in offers are serious. So it's nice to be dealing with those types of people. And actually, it kind of dives into the rest of our podcast, because now's the time we're going to dive into some headlines. And it's funny because Chris says now's the right opportunity. Man, I swear, Chris, I think we're on like our 11th podcast. And these headlines just keep coming through. Like, I am not joking. Are you ready for this, Chris?
You can count on them.
Redfin shuts down iBuyer. Redfin now will slash 13% of its workforce. How often in the last couple of months have we been talking about company after company after company going through the same exact scenario?
Yeah, I mean, it's mind-blowing that I call them seat covers that think they can come into our industry, a lot of them, and perform at our high level. Like, I know what I put in emotionally, physically, mentally, financially into the success that I have. And I don't know that you can succeed without that investment of yourself, or somebody without that.
Yeah, no,
that commitment.
I completely agree. Here, let me just read you guys a couple little articles of this, or a couple little lines. It says, as many as 264 people impacted by the cuts were with Redfin, the company iBuying division. So it's just their iBuying division, while additional 218 jobs from other departments will also be eliminated. So you're looking at 500 jobs that Redfin is slashing. It says as many as to prosper in a housing downturn that could last at least through 2023, we have to simplify our business. We're closing our iBuyer program down. Redfin now, because maintaining a profit with rising interest rates would now make our offices on homes insultingly low. A sales spokesperson for the company said in a statement, "We're laying off employees beyond Redfin because we expect to sell fewer homes, even as we keep taking time and market share away." Wow. I mean, That is nuts. I mean, these companies, it's so funny. I'm watching the crypto too, but these companies are collapsing within themselves. It's insane because 2 years ago, everybody thought Redfin was a giant.
Well, I still think they are a giant. I don't think they're going away. I think this is a strategic move.
Okay.
Right? So, look, they rode a ridiculously high wave for many years with their iBuyer program.
Okay.
And now they're just so over leveraged and the market has shifted and stalled so much that they can't keep up. So it's a smart move to just terminate that division of their business and stop the bleeding and just reallocate funds and staff in other areas where they probably plan to grow. I don't see them going away.
But restructuring.
But restructuring, yeah. I mean, look, listen, this market has changed. So the business model for big companies like this is also going to change as the market changes. So it's not bad, or it's just different. And so I think with Redfin, they're just pivoting.
Rob, February 15th, which is, a couple months away, of 2021. You ready for this? Redfin, their stock, $96 a share. Okay? That was 1 year ago. Okay? Do you know what their stock is trading for today, this morning?
$2.
$3.32.
Yeah.
I mean, I think it's more than strategic. I think they're facing some financial adversaries in front of them. They're going to have to really I don't run a business where we are publicly traded, but I do know from other experiences that I've invested in, when you have a company that's gone to $96 and it's back down to $2 or $3 within one fiscal year, there's some shit going down. I mean,
I guess it just depends on how much money they were funneling into the iBuyer program, right? I mean, none of us really know the details, and the media loves to scare us.
Agreed.
Who knows? I guess time will tell. But here's what we do know. Like, are there opportunities to iBuy right now? Absolutely. Are there people out there that would make great candidates for the iBuyer? I think so. At scale, I don't think it's the market for it. I think there's that like individual investor that's in the market that's like, hey, I see an opportunity to buy your property, cash, get you out of it. Let's leave real estate agents out of it, and then they'll flip it and sell it. I think those opportunities will always exist in any market.
Yeah.
But at scale, it doesn't work great because there's just not that many opportunities for iBuyers. Like they said, they don't want to send out insulting offers. And here's the reason why the offer is insulting, because there's so much uncertainty out there that they're scared to submit a generous offer because the margins are so tight.
Yeah.
So they're like, for example, I was talking to one of my buddies, Jimmy, he does this, and he was like, right now, whatever we think that we want to offer, we're going 7 to 10% below that because we're factoring in the uncertainty in the market. If it shifts faster, we want to make sure we can at least still leave on a positive note. So that's where I think Redfin's coming from, where it's like, our offers are insulting because they're scared to offer what they want to offer because there's too much uncertainty.
Yeah, and it's true, especially when you're holding on that much inventory.
And sellers are like, no, I'm not taking that much of a cut.
No, of course not.
And after you get that many no's, they probably have analytics on the back end that are like, okay, our model doesn't work anymore in this market.
And then also, if I'm correct, I don't have their paperwork in front of me right now, but I've looked at it in the past. They're charging upwards to like 12% on those homes. You know what I mean? These sellers don't even have an idea of what they're paying to Redfin.
Like add-on fees and stuff.
Oh my God.
Yeah,
it's astronomical. It's like 12-13%, and we're only charging like 5%. They just don't see it because it's not like right there on the contract. It's on the back end.
Yeah.
It's funny. I'm going to keep going on about this article. It actually said just hours after it announced it was ending the iBuyer program and cutting staff, Redfin on Wednesday revealed a revenue ticked up slightly in the third quarter of the year, even as its loss spiked. In a total, the company brought in $600 million in revenue between July and September. That's up 11% compared to the same period last year. However, despite the uptick in revenue, Redfin also suffered a net loss of $90 million, up from a loss of $18 million in the third quarter of 2021. So it says the company's third quarter revenue was also down slightly from second quarter. It says their latest earnings report came the same day as it announces it's laying off 862. Oh, this is what they wrote. This is nice quotations. Laying off 862 brilliant, loyal people.
Wow.
Says Redfin's CEO Glenn Kelman.
Yeah, what they do with the unloyal ones? Burn them?
Yeah. Oh my gosh. So that's Redfin. I'm going to keep going on. Our next article that we have here, let me just scroll down a little bit. Man, that was a long article about Redfin. Holy smokes. This next one, actually, this is kind of cool because Rob, he just started a new brokerage with 5, and Chris just came over to a new brokerage. So this actually pertains to both of you right now. It says, recruiting season is afoot. 10 brokerage red flags to watch out for. It says finding the right brokerage is essential to growing your real estate business. Watch for these warning signs and red flags that indicate it's a bad fit for you. And it says, new markets require new approaches and tactics. Experts in the industry take stage. It says if you're thinking about making a move, heavily recruited, it pays to go into interviews with questions in hand. The right questions are more important than having no questions. Here are 10 flags to watch out for. So here we go. First one. A stinging commission split. Stinging. I like how I threw stinging in there. So not just like commission splits.
Some of them sting. I've heard them. They're stingy.
A commission split is one of the most they didn't even write this correctly. It's probably one of the most considerations in deciding a broker is right for you. The percentage of realtor takes home the sale of is relatively low. For example, 6% of the sale split between the buyer and selling agent. 3% goes to the buyer. It says most brokerages will ask for a 60-40 split. But some will give more to the other agents. Obviously, the less the brokerage takes, the more the agent gets. In fact, if brokerages ask for 40%, that could be red flags, unless the value they provide through training leads is warranted. Keep in mind that some brokerages will have cap on commissions. For example, $100,000 cap means if agents earn up to $100,000 in sales, they will no longer have to pay the broker. That being said, you can't judge opportunity on splits alone. As the other points mentioned, there could be other things that are more important. So one is commission. I don't necessarily think that should be one, but one's commission. Number 2, lack of growth support. Most brokerages will offer their agents some amount of support. Number 2, too many fees. Typical for brokerages to charge fees to their agents. Franchise fees, office fees, MLS fees, training fees, marketing fees, errors and admissions, E&O, startup fees. Very interesting. I agree with that. Number 4, the internet presence or poor marketing. Number 5, no administrative support. Number 6, bad reputation. Number 7, the wrong culture. Culture is a huge factor in any marketplace. It comes through to look at the office, And number 8, they don't allow for your specialty, which is weird. And number 9, no mentor support. What do you think about those red flags? I mean, you guys, when you guys made a switch, like what was most important to you to make that move? Because right now, just so you guys know, I don't know if you guys look at these statistics, the market itself, most agents, the average agent, 80% to 90% of agents are down 30 to 40% this year in business. So with that being said, a lot of agents right now aren't necessarily, I wouldn't say happy or content. They're scared. And a lot of agents are jumping ship, going to other places right now because they think there's better opportunity elsewhere. Mm-hmm. So what are your guys' thoughts on all this?
I've always been attracted to brokerages based on people.
Okay.
I think of every single brokerage I've been at, including Century 21 when I first started, and I joined that brokerage because of an agent that was at that office.
Okay.
I'm a big-time collaborator. I love to work on projects with other people, and so for me, people are first. So when I'm recruiting, I'm also looking for agents that I want to not only work with and teach, but also learn from.
Yeah.
That's number 1. People are first.
Okay. Okay. When you joined 5 next to people, like what else were you looking for?
So the low split was definitely attractive, but that wasn't my driving force. It was really more about creating an alliance with the broker, Nazar.
Okay.
He was one of my best friends at the time and still is. And the idea of being able to build a brokerage with him sounded exciting.
Okay.
The low split allowed me to repurpose the money I was investing or paying my previous broker and actually use that to pay for office rent, utilities, office furniture. And now basically for the same cost that I was paying a broker, I have now have my own office space and I've developed my own culture, which has been really exciting.
Nice.
So that being able to be at a brokerage that offered a low cap helped me keep more money that I could reinvest in my business and actually build out an office that I really wanted to build.
Okay. Nice.
Very cool.
Nice.
Yeah. I was just promised a podcast with Robert Mack, so I'm happy.
We delivered.
Today's the day we come full circle. I love it.
Payday.
No, hey man, this is people. I love this kind of stuff. I mean, my days are brighter and better when I get to win with my friends.
So true.
Yeah, absolutely.
So true.
That's it. I just want to win with my friends.
Yeah. Okay. So that's it, huh?
Yeah, no, the intimacy here was obviously really important to me. I mean, being a part of a family is more important than being a number, and having people that, have your back and are going to push you to, your limits and
completely agree.
Yeah,
I do want to add one thing around the splits, because I think, especially for newer agents that might be listening to this that are thinking, I want to join a company, but I don't necessarily know anyone that I can link up with.
This is called carefrontation, you guys, so listen up.
It's more important to focus on the amount of money that you want to earn as an agent, and if that team leader or brokerage can help you earn that much income. It's not necessarily about how much money you make per check.
Sure.
So I would much rather sell 3 homes at a 50-50 split than no homes at a 100% split.
Yeah,
absolutely.
All day.
Right.
Yeah.
So I'm looking at the big picture, and when I'm talking to agents, whether I'm recruiting them for the brokerage or if I'm recruiting them to my team, it's, what do you want to make? Why do you want to make that much money? And then let's reverse engineer it and see what you have to do and what I have to do so we can support each other and help you get what you want. And that's really important at a brokerage too, is like real estate. We hear this all the time. Real estate's a lonely business. So you want to link up with a broker that's going to be actively involved in your business. Yep. And if you're not going to be able to find that person and you're not a self-starter, then you've got to join a team and have a team leader and mentors and managers and staff that are going to help you achieve your goals. But if you're not a self-starter, this business will eat you alive.
I completely.
Yeah,
even if you are a self-starter, it will eat you alive.
Yeah, and absolutely. And I think that was it. Like I had this vision of like my pipe dream career, like office, what it looks like. I mean, I've been thinking about it for a really long time.
I love that.
And then I walked into here and I was like, somebody already did it. You know what I mean? So it was perfect to link up, and the work has been done, and I can jump in and full speed ahead, and focus on my career and have your support.
It's funny you say that. At the end of the day, kind of like what Robert kind of mentioned, Chris mentioned. I mean, I started at Century 21 as well, and I started in an office that where Tom used to say energy sucking vampires. Like we came in, and Shar always did okay, and then we came in and we really excelled in the brokerage, where to the point where no one liked us in the brokerage. Like we walked in and people like gave us like sour looks because all of our listings were on the whiteboard and they had nothing up there, and it was like week after week after month after month. And when you're an agent in the office and you're seeing that, you either react 2 ways. 1, you're excited for them, which never happens, and 2, pissed off and like gross. So we actually stopped going to brokerage meetings, and we stopped even partaking with anyone in the office because it was just always sour. And in that moment in time, with all the other industries and service industry and retail industry that I've ever worked at, I was like, you know what? We need to create something that agents can come and excel and have fun, have the right support, have the right energy, have the right atmosphere, connect with the city the right way. So this has been like a 10-year journey. And, to have both of you as my friend, and then you also as my friend, but also in the brokerage, like these are the people that we've worked our whole lives to be connecting with, to be putting this together. And all of us are a rarity, even to be sitting on this podcast to do what we're doing. And it's nice to sit here with other like-minded people that are doing high-level things, talking high-level topics, trying to educate our sellers, educate our buyers. Rob educating the new buyers, agents, trying to show them the ropes, because in all reality, you new buyers out there, you agents out there, like times are really tough. So if you're not hooking on or connecting with somebody that's already been through the last collapse of the last market shift, like you need to be someone who's been to the lighthouse already. Because if you haven't been someone that's already been to the lighthouse, like you're going to be drifting out in the ocean for the next 2 or 3 years. Yeah. So I think all the content was really good. I want to thank both of you guys. Robert Mack, thanks for driving up here today. Really appreciate you coming through. We got some huge gems, some great golden nuggets. So if you guys watch the whole podcast, make sure you jump in and watch Robert Mack. And then also we have Chris Fox, always dropping some good knowledge. Always a pleasure to have you on. Love our topics, love our conversations. And you guys, don't forget, be sure to subscribe below. Leave some comments. Don't care what you leave. Actually, I do care. Leave everything nice. But yes.
Let's start the conversation.
Let's start the conversation. So thanks for tuning in. Appreciate you guys. And be sure to join us next week. All right? Cheers, guys. Have a good one.
Cheers.